$50 a week into SCHD today will make you achieve a happy retirement. With just $50 a week, you could be setting yourself up for a retirement where your investments pay you over $11,000 per month. Sounds unbelievable, right? I mean, $50 is less than what most people spend on coffee or takeout. So how could this seemingly little amount transform your finances? That right there is the power of compounding and dividend investing. In this video, we will show you by snowball effect how a simple, consistent investment in SCHD can turn small weekly contributions into a seven-figure portfolio. No complicated stock picking, no risky trading, just steady, reliable income that keeps increasing. So if you're ready to see how just $50 per week can transform your financial future, let's get started. What is SCHD? Imagine you had a golden goose that lays eggs every quarter, and those eggs get bigger and more valuable over time. But here's the best part. Every time the goose lays an egg, you don't just collect it. You put it back into feeding the goose, making it healthier and stronger. As time goes on, the eggs multiply, and soon, the goose is producing more than you ever thought possible. This is exactly how the compounding effect works with dividend investing. Instead of spending your dividends, you reinvest them, which means you buy more shares. More shares lead to more dividends, and those dividends buy even more shares. It's a cycle that keeps growing. Now, this is basically what SCHD does. SCHD, or the Schwab US Dividend Equity ETF, is a basket of some of the strongest, most reliable dividend-paying stocks in the US. Now, why should you care? Simply put, SCHD is the ultimate set-it-and-forget-it investment. Even better, it holds a carefully selected group of companies that pay consistent and growing dividends, have strong financials, so they're not just throwing money around recklessly, and are chosen based on actual performance, not just hype. Wondering how SCHD makes this selection? Let's begin with their strategy. Interestingly, SCHD's strategy is quality over everything. SCHD isn't just another dividend ETF that buys random companies that pay high dividends. Instead, it follows a smart, rules-based approach to picking stocks. It looks for companies that have 1. At least 10 years of consistent dividend payments, so no one-hit wonders. 2. Strong fundamentals, including high return on equity and solid cash flow. 3. Sustainable and growing dividends. It's not just about getting dividends, it's about getting dividends that keep growing year after year. These companies aren't just paying you, they're making more money and passing those profits on to you in the form of bigger and better payouts over time. The goal? Reliable and growing income with a portfolio that's built to weather different market conditions. Now that you understand the basic idea of what SCHD is about, let's go deeper into where SCHD puts its money. Sector allocation. Unlike some ETFs that chase trends, SCHD is spread across different industries. Interestingly, the largest sector in SCHD's portfolio is financial services at 20.24%, and it makes sense. Banks, insurance companies, and financial institutions tend to be cash machines when the economy is doing well. They generate tons of profits and share that wealth with shareholders through dividends. Next up is industrials at 15.69%. Industrials include companies that build, manufacture, and transport goods. Naturally, these companies are the backbone of the economy, and many of them have been around for decades. Think of businesses like machinery manufacturers, defense contractors, and transportation giants. Their dividends are stable, and they usually perform well as long as the economy keeps moving forward. Another huge sector is technology. Tech isn't usually known for dividends, but SCHD picks cash-rich, dividend-paying tech stocks that can weather economic downturns. That said, a whopping 14.98% of its sectors are tech companies. Why this sector mix works? Unlike some ETFs that spread themselves too thin or chase high-risk stocks, SCHD sticks with proven winners. By balancing high-yield sectors like financials and energy with stable, recession-proof sectors like healthcare and consumer defense, SCHD creates a portfolio that performs well in different market conditions. So whether the economy is booming or in a downturn, SCHD's strategy ensures you're getting steady, passive income, which is exactly what makes it such a powerful tool for building wealth over time. Holdings in SCHD. Now talk about what's inside SCHD, because the companies it holds are some of the biggest, most reliable dividend payers out there. At the top of the list, we've got Lockheed Martin at 4.49%. This defense giant is literally built on government contracts, think fighter jets, missiles, and military tech that countries around the world need no matter what. And with ongoing geopolitical tensions, Lockheed isn't just in demand, it's thriving. Plus, it's been consistently growing its dividend, making it a rock-solid addition to SCHD's lineup. Then there's Coca-Cola at 4.17%. You already know this one, it's everywhere. From fast food chains to vending machines to your own fridge. Coke's brand dominance is unmatched. This company has been paying dividends for over a century, which means reliability is built into its DNA. It's the kind of stock that keeps delivering, rain or shine. And let's not forget tech. Cisco Systems, 4.04%, and Texas Instruments, 4.02%. Cisco runs the internet. Its networking gear powers everything from offices to data centers. Meanwhile, Texas Instruments is a semiconductor powerhouse, making the chips that run everything from AI-driven tech to everyday electronics. With the digital world exploding, these two companies are set to thrive for decades. And their strong balance sheets mean steady, growing dividends for SCHD investors. Notably, these are just a few. SCHD is packed with even more big-name rock-solid companies that know how to make money and share the wealth with investors, such as AbbVie, BlackRock, Home Depot, and many more. Now, to really prove how good SCHD is, let's take a journey through its performance over the years. Historical performance of SCHD. Since its inception in October 2011, SCHD has been on a remarkable upward trajectory. Imagine this: if you had invested in SCHD back then, you'd have seen your investment grow by approximately 191% over the past decade. That's just a hair below the S&P 500's 192% return during the same period, showcasing SCHD's impressive ability to keep pace with the broader market. Now let's talk about dividend yield, because this is where SCHD really puts the S&P 500 to shame. SCHD's dividend yield sits at around 3.6%, while the S&P 500? A measly 1.4%. That means SCHD pays out more than double the dividends of the overall market, and that difference adds up fast. In terms of market performance, SCHD has shown resilience and growth. As of February 10, 2025, it was trading at $27.68, not far from its 52-week high of $29.72. This near-peak performance indicates the ETF's strength and the market's confidence in its strategy. Financial metrics. Thankfully, SCHD isn't just about capital appreciation. It's also a dividend powerhouse with a track record of making investors smile. Right now, it boasts a dividend yield of 3.61%, meaning for every $100 invested, you're getting $3.61 in dividends per year. That's really solid. But the real magic happens with dividend growth, which has been soaring at an average of 12.21% per year. Imagine getting a raise on your passive income every single year without lifting a finger. And let's not forget about share price appreciation. Over the long run, SCHD's price has grown by 11.20% annually. That means not only are you collecting dividends, but your initial investment is also growing at a strong pace. Put it all together, and SCHD is delivering a perfect balance of income and growth, making it a powerful wealth-building tool for long-term investors. Now, for the moment of truth. Let's break down what happens when you commit to investing just $50 per week or $2,600 per year into SCHD. Return projection. Looking at the numbers in the first year, it might not seem like much at first, but when you let time, compound growth, and reinvested dividends work their magic, the results are jaw-dropping. After 5 years, you've steadily contributed $13,000 over this period. But thanks to SCHD's combination of dividend reinvestment and capital appreciation, your portfolio has already grown to around $17,600. Even more exciting, your investment is now generating about $500 in yearly dividends, enough to cover a few streaming subscriptions or a nice dinner out every month. By 20 years, things start to get really exciting. Your total contributions have reached $52,000, but your portfolio has ballooned to an impressive $317,000. That's the power of capital appreciation and reinvested dividends working together. SCHD isn't just paying you dividends, it's growing your money at the same time. And those dividends? They're now bringing in $17,300 per year, or about $1,400 per month. That's like having a part-time job that pays you without you ever having to clock in. Fast forward to 30 years, and this is where wealth building truly hits another level. Your total contributions stand at $78,000. But thanks to the magic of compounding, your portfolio has exploded to $1.85 million. And the best part, your dividends alone are paying you $135,000 per year, or roughly $11,000 per month. That's full-blown financial freedom, living purely off passive income, all from just $50 per week of disciplined investing. This is the power of long-term investing, reinvesting dividends, and staying patient. But more than that, it's the magic of compounding. Over time, what starts as small, steady growth turns into an unstoppable force, pushing your portfolio higher and your passive income to life-changing levels. And with SCHD, you're not just building a portfolio, you're building a future of financial freedom. Ready to kickstart your investment journey? Do share your thoughts in the comments. Like, share, and subscribe to the channel if you haven't already, and hit the notification bell so you don't miss out on future tips.